Hey, Dan Passarelli here. Well, I've got a number of things to talk about here. First of all, a quick what to watch the rest of this week. We've got the Beige Book coming out tomorrow, which is basically put together by some of the Federal Reserve banks, and it helps everybody get on the same page as to what has changed in the economy since the last Beige Book. Those always come out 2 weeks before the FOMC announcement, so that's just about 2 weeks away too. So there's going to be important information in there. Also, we have a couple of Fed speakers this week, and we have the regular Thursday unemployment report. So those are the things to watch. Now, from a technical standpoint, here is what is important to think about. Basically, it's decisiveness or not decisiveness. Okay. And it's very important to follow decisive moves in the market. So, how do we tell that? Well, one of the things we do is look at volume. So, take a look up here at the chart. So, yesterday, right? Yesterday, the market was down a fair amount. We see this big red candle. Oh, I want to show you a little bit of a trick before I go any farther here. So you have this pretty big red candle. It's like the biggest candle on the screen by far. It's like twice as big as any other candles, right? Well, yes, but stocks and ETFs move in percentages. So what we want to do is we want to adjust our charts here and click on use log scale. So now this makes a 1% move look the same size as a 1% move instead of a $1 move look the size as a $1 move. So it gives us a better visual picture as to how big some of these moves actually were. Now, yesterday's move still was a big move. We had one here about the same, but we can see that when we look in percentage terms here, some of these were still pretty big moves as well. Moral of the story is this was one of the biggest down day we've seen in the past 6 months, and it was on big volume. So what does that mean? That means there was this battle between the buyers and the sellers. There are people who were buying it from people who were selling it, and the buyers end up pushing it higher, taking out all those offers, and the sellers end up pushing it down, taking out all those bids. And so there were more sellers than buyers, and they really pushed away. They scooped up all those bids and pushed it down to find lower bids. Now today, it ended up being pretty much of a little bit of a doji day. I'm sitting here a little bit before the close, just a smidge before the close, and this was one of the lowest volume days in the past half of a year. So dojis are already indecisive candles to begin with, not to mention on very low volume. The market's trying to figure out what to do. Now, this will be the second day of it closing below the 50-day moving average, so there is a very likelihood of that going from support to resistance. If we close a third day below there, that just makes it a stronger signal of having flip-flopped its pivot point from support to resistance. Those are the main things to be paying attention. We have much more to talk about the rest of this week. Please make sure that you like this video, that you're subscribed to the channel, and that you go into your settings on YouTube or what have you to make sure that you get notifications when these videos are posted so that you're not missing anything important that I have to share with you. Hope that helps. This is Dan Passarelli, Trade Smart.